Thank you so much, everyone, for sticking around with us today. I hope you've enjoyed the panel so far. If you're just joining us, welcome. So I'm Duncan Hoffman. I'm the Chief Revenue Officer at Kiln, and I'm really excited to be joined by this panel of three excellent guests who are extremely influential in crypto in Europe. And so I'll start by just introducing them, and I'd love to hear from them a little bit about their backgrounds. But from your left to right, we have Mark Nuvelstijn, the co-founder and CEO of Bitvavo. We have Lukas Enzersdorfer-Konrad, the Deputy CEO of Bitpanda. And we have Daniel Seifert, the Managing Director of EMEA for Coinbase. So please welcome him. So that's obviously a quick introduction, but I'd love to hear from each of you guys a little bit about your company, your background, how you got to where you are today. Maybe we start with you, Mark.
Yeah, sure. And first, thanks for the invite and thanks for being here. Mark Nuvelstijn, I'm the co-founder and CEO of Bitvavo. We are one of the biggest European crypto exchanges. We started 5-6 years ago with our company, moved from a broker to an exchange. I think we are one of the only native exchanges here in Europe. We support around 250 crypto assets here. I think we are currently one of the biggest from a Euro crypto volume perspective. I think we're step by step expanding our business from Western Europe to our friends at the DACH and potentially a bit further. Our core focus is listing more tokens and trying to provide our customers with more features to trade. So that's what we do.
Awesome, thanks.
Cool. Hi, I'm the guy who was running late, so thank you very much for waiting here. I learned the hard way that Google Maps is not reliable here in Paris. Nevertheless, I guess you all know it. My name is Lukas Enzersdorfer. I'm Deputy CEO at Bitpanda and running our whole operational business. We at Bitpanda are the most regulated and largest crypto broker in Europe, market leader in DACH, actually, and with more than 4.5 million users. And we focus on not just enabling our customers the easiest way to get into crypto, but also to earn on that, right? And staking is very important. We have more than 30 different staking coins. And that's the reason why we're also here today. We work quite closely together with Laszlo, and Kiln in general are quite happy, also as a customer, and therefore I was allowed to participate here. And it's great to be here. And to be late. And to be late, I don't know, probably they throw me out afterwards, but I'm a customer, so it's fine. So.
Thank you, Lukas. Daniel Seifert from Coinbase, as you just mentioned, looking after the business in Europe. Coinbase founded 2012 with the idea that anybody should, at the time, hold Bitcoin. It was just a custody solution in the beginning, but then also kind of acquire and get into the ecosystem. And ecosystem is also what we're focusing on lately. Maybe some of you have heard about this layer 2 that we call Base that we've launched. Nowadays it's all meme coins, but it's also already taking a good share of the volume on Ethereum.
Cool. Well, thank you, guys. I'd like to start things off on a little bit of a lighter note, right? We're talking about the state of the market in crypto today. It's impossible, in my experience lately, to go around and have casual conversations about crypto and not delve into some discussion of, are we in a bull market now? What's the next all-time high going to be? How long is this going to last? But it occurs to me, you guys have a pretty asymmetric view, let's say, of the data, of user behaviors. What does it look like from your perspective? What are some of the signals you're looking for, and what would indicate to you that we're really back, or this is something tangible that's going to last for a while? I'm curious from.
Yeah, sure. So I think the crypto market definitely has substantially more traction and more tailwind since Q4 last year. I think that starting from that moment, once there was more visibility on the upcoming ETFs in the US, there was substantially more interest in crypto assets again. I think you saw it in the rise of the crypto assets, the inflow of capital and the inflow of customers. I think that's still going. Personally, I wouldn't classify it yet as a bull market. I think there's still less mass attention from the general market into the space. But I think the trend is definitely up and positive. Nobody knows how long it will go, how aggressive it will go. But I think it's definitely a good market at the moment.
I mean, yeah. I think like the way that we would look at that thing is like sort of a rising tide lifts all boats. So I think what is kind of feels a bit different in this cycle is like it's not only retail trading, but we really see actively businesses, and we see financial institutions being active in the market and kind of participating and bringing volume and bringing liquidity into the market. But that in turn kind of then also brings in again retail interest. So I think it feels much more comprehensive this time around.
Exactly. Would just add two topics here. I think one thing is very strong Bitcoin ETF-driven activities, right? So US approach, and the European one is much more coming from traditional financial institutions who step by step get into the space due to having MiCA, right? So a clear regulatory framework on the horizon for starting early next year, and therefore they are also now getting into that. And I think these are two very interesting forces because it's not the same, it's different per continent, but both supporting market activity and therefore also retail interest. But I would also say we are definitely not yet in the bull market. If you look on the activity, reactivation is there. Global market growth, much more driven by, as said, institutions probably.
All right, you heard it here. There's still room to grow, right? So I'm curious in particular, Daniel, obviously Bitpanda and Bitvavo operate predominantly in EMEA, right? But you guys at Coinbase, it's global, you're everywhere. When you're talking to colleagues in the US or in APAC, is there anything categorically different about the European market that, is it lagging, is it leading indicators? How does it compare to the rest of the world as it's coming back?
Yeah, certainly. I think, Europe has a very special thing. You were just alluding to MiCA as a very special thing going because it's like probably the first region to have regulatory clarity. And I think certainly none of this sort of started last month, right? I mean, these discussions on a policymaker level, they've been going on for years now. And particularly 12 to 18 months ago, I think when it started to take shape, we've seen a lot of the other geographies and regions, so especially in Asia, partially in the United States, look towards Europe and kind of realize, oh, wow, there's something happening, right? And they probably got it wrong this time. I mean, not everything is perfect around MiCA, and we certainly have ideas how you could make a MiCA too. But it's certainly, I think, if you sort of compare this on a global scale, it's probably leading the way, right? And I think it's no coincidence that you've seen that probably 4 or 5 years ago, 40% of the global blockchain developers would have been in the United States. And then 2 years ago, it was already down to 30%. And now it's even below the 30%. Whereas Europe has kind of grown from 20% to more than 30%, right? So I think it's been sort of a big leveling in terms of where the blockchain talent is and where the development takes place.
Interesting. Lukas, you mentioned kind of this concept of reactivation, right, and how you're thinking of users come back. Just in line with those general crypto conversations, the cliche is always, how do we onboard the next billion users? But something I'm curious about, if we look at what's happened over the last 2 years with FTX, with Terra Luna, a lot of people got burned in that, right? And those were a lot of retail users. Are you seeing something like a kind of a once bitten, twice shy phenomenon? Are the users coming back? Are they different people? Are they more reluctant, those who were in before? Where is that going to come from, I guess? Are people staying away and it's new people coming in? I
think the most important topic, what we've seen in general on the retail side, but you can also expand it to business customers in the end, is since FTX, they value the topic and value proposition of being the regulated and trustworthy player much, much more, right? And I think we discussed it today at lunch with some other colleagues who have been also at the last Paris blockchain weeks here, actually in Paris. If you think about how it was 2 years ago, when Binance sponsored the whole city more or less, right? These days are gone. And it's the reason because the industry is not just maturing, the topic of security and regulatory clarity and safety is much, much more important. And you definitely see that also on the retail side. However, retail users are, and I think that's related to trade volumes over the last year, much more attracted by market activity. If the market stays flat, there's less activity, independently of if they had a negative or a positive event over the last years. So I think as we have much more market activity back, also reactivation of society for the topic is much, much more there. People are getting curious about it. But as said, I think the main topic actually is being safety, trustworthy, regulated, one of the most important topics, and especially after the FTX crisis.
That makes sense. And so as you guys look at the market coming back and it heading in a positive direction, I don't imagine you're just sitting on your hands and necessarily waiting for everything to go up, right? What are you viewing as your opportunity? I'm curious from each of you, what are you particularly focusing on? And maybe these are overlapping opportunities too. So.
I think in our view there are a few opportunities at the moment. I think given that the market gets more traction, we also see quite a lot of new coins going up. So that's, I think, the first thing to enable our customers to get access to it. I think secondly, I think the market is step by step maturing, and therefore, in our view, customers are also looking for more advanced trading features. So I think we are preparing that to allow our customers to trade with short functionalities or margin trading or other kind of things. I think the third thing is once this market becomes more mature and more regulated, I think it's for customers also important to get more localized services and to go deeper in each market. I think for us, there are the 3 core focus areas, how we think we can add value for our customers.
I think in general, as said, right, most important is the topic of ensuring safety, regulatory clarity. That's the reason why we at Bitpanda are actively working not just license-wise in the past. We have more than 15 different licenses, and also not just in the crypto space, but with an e-money license, with a MiFID II investment firm license. So the whole topic about safety still is one of the big topics, actually. The other topic is already mentioned, having a vast offering for the customer, but knowing also their specific target group, right? And I think you need to know your customer group quite well, how sophisticated they are or not, that you can really build things which are definitely relevant in that regards. And the last topic is probably the whole derivative space, as you just mentioned, where I think on a global level in the unregulated space, we've seen a lot of movement. If you look on the Asian exchanges who are derivative exchanges, but getting also that into a fully regulated setup here in Europe is something actually where we are actively working on.
Yeah, and just to follow on, I think you were already saying is this sort of old phrase of bringing the next 1 billion people on chain. I think it's like for us, there's a big focus on this supporting the developer ecosystem, like bringing right tools, etc., like the base layer 2 that I was speaking about, but coupled to that, developments like Farcaster and kind of like, literally the utility cases, I would say, is really like a big focus area for like, how can we move from the investing, which is amazing, it works well, etc., but like, how can we move beyond that and kind of go into a utility phase of crypto? I think will be one thing. And then the other one is, I think what you mentioned earlier, the regulatory aspect, like especially in Europe, kind of like preparing for MiCA, so all the investments. I mean, we're already a heavily regulated player, so it's obviously is much smaller step, but there's still work to do.
And so I'm curious as well, in the past, like a couple of years ago, there was this narrative, once the banks arrive, they're going to kind of eat the crypto natives' lunch and everything like that. It's arguable whether maybe they kind of slowed down when the market went down and they pulled back a little bit too. How is your view of what the role that banks and fintechs and more traditional players are going to have in this space? Has that changed over time? Is it more in cooperation? Are they still coming in force? I mean, we see the asset managers in the US obviously launching their own ETFs, very classic ones. What do you think is going to happen in Europe, and how are you preparing for it?
That one is for you, Lukas. I think it's your core focus.
Thank you. Yeah, exactly. So I think partnering up with them, right? What we've done at Bitpanda, we've built over the last 10 years infrastructure because there was none back then, and a whole platform. And what we do is we are powering, for example, here in France, Lydia, a large payment app actually, where we power the whole crypto, but also digital asset investment offering. We partnered up with N26, neobank from Germany, N26 Crypto, also now rolled out in France since last month, actually also powered completely by Bitpanda. We started with Raiffeisen, one of the largest Central Eastern European banking groups, to step-by-step roll out their crypto and digital assets in general, and much more to come over the next couple of months. So I think what you see is there is a huge interest from banks on the retail side, but also in corporates, on the institutional side, in capital markets, to get into that asset class, which is for sure different to the US, where it's very asset manager product issuer driven, where in Europe we already are in a completely universal bank framework, where they are much more interested in getting there. And I think we will see much more this year, but for sure also 2025, when some of them actually want to get their own MiCA license, want to offer these services on their own. And for us as an infrastructure provider, since more than 10 years now, first to end customers and now also to partners, that's a very important thing.
Yeah, and I would just add to this, I think next to the financial institutions, the other interesting development is businesses. So I think like very recently, like more than 50% of Fortune 100 CEOs said that they had like already either invested or were actively pursuing initiatives in the blockchain space. So I think, this sort of activation in that area, I think is one big focus that we see at the moment happening.
What about, yet another thing that kind of happened in the wake of the FTX and some of these blowups here was this huge migration towards kind of non-custodial solutions or self-custody, right? And obviously you guys have all three of you have a large centralized exchange business. How have you adapted to that, or how are you thinking about that? What does the future look like in terms of that balance? Is it an equilibrium? Does it go entirely in that direction? Is it either self-custody or licensed? What are you expecting to see?
From our side, we saw that customers were definitely interested after the FTX event in more non-custodial wallets. I think in our view, that was more on a temporary basis. So at least what we saw is that customers pretty quickly started to keep using centralized exchanges. And although they are more in control with a non-custodial wallet, they still like the convenience of a centralized exchange or centralized wallet. Personally, I expect that over time, there will definitely be more interest in non-custodial wallets. But I think the core thing there for platforms and other players is to really make it as user-friendly and as seamless as possible. And I think as an industry, we need to step by step grow there.
I think Web3 is an important topic, but if we think about not just the super early adopters innovation space when it comes to our blockchain crypto world, it's much more about how to get that to the customer groups, probably the three of us here as companies are serving, which is not just on the super early side, right? So and there it needs, again, the topic of safety, security, Web3 in general, therefore also non-custodial solutions to not just store value, but much more let them interact with smart contracts and other functionality, right? And there's still a lot of scam out there, so I think building there a safe and secure environment long term so that end customers, retail, mass market can interact with Web3. That will be the challenge, but also the problem to solve over the next couple of years. I think, Daniel, you either way already quite strongly working on that.
A little bit. No, but yeah, I was going to say, you guys know, obviously, like next to the custodial offering, next to centralized offering, we also have like decentralized offering, like with Coinbase Wallet. And then very recently, we also introduced smart wallets. Which is kind of like a really cool thing because like within seconds you can basically open up a decentralized wallet for yourself without sort of ever having to write down seed phrases and these kind of things because it gets stored as a passphrase on your device. So that's something that we're massively excited about, like because I think sort of this last mile for user experience was kind of always still missing, right, and kind of difficult to explain to people how that even works and why they should do it, etc. And for me, it's kind of like not a sort of either or. I think I see the future as kind of is a bit of both, right? I think there will always be a sort of demand and a kind of part of the market of people that prefer to sort of, hey, can you help me manage my assets? And there's going to be a part of the market where people will say, look, I want to do this myself. I want to have the economic freedom. I want to have the control and so forth, right? So I think for us, it's important to be active in both places.
I guess to piggyback on that, right, you're talking about smart wallets and some of these new innovations. Are there any other particular innovations in the space that you guys are excited about or paying attention to? I know we're obviously talking a lot about Eigenlayer and kind of Bitcoin staking at Kiln, but what's on your, right in front of your roadmap or on your face here?
I think probably to jump in here, the whole development of on-chain activity is a very interesting one to look over the next cycle also now. Because there's a lot of activity ongoing. I think there are large projects actually like Base who are fostering that, but it's much more about bringing it to not just early adopters, but much more really a mass market Web3 community, and therefore all these developments need to be easy, need to be accessible. That's the challenge to solve.
Yeah, I would say so. And it's so interesting that you brought up Eigenlayer. So I think, we've been, as you know, like we've been in the node operator working group since Q4, meeting monthly. Those developments really massively exciting. I think that, as you know, that gets a ton of attention at the moment. And then, anything around kind of restaking, I think all those developments, is big. We're going to see a lot of development.
I can only echo the other guys. I think they're right.
What about, you guys obviously know each other quite well, right? It's obvious from our conversations right before we started the panel and everything. How do you view the competition in Europe? Is it heating up? Obviously a bit of a vacuum was left with Binance kind of exiting. How are you setting yourselves apart? Are there particular areas, in addition to what you've already mentioned, where you're seeking to stand out?
Being on time for meetings.
You can start with that.
Punctuality. Sure.
I'm always late, hopefully not in the market.
You were answering your users, so it was like
Exactly.
as good as it is. Sure.
I think you're definitely right that there's let's say there's more that offshore exchanges have some pushback at the moment. I think that gives opportunities for both local exchanges or regulated exchanges. I think that's good for all the three companies. I think all three companies, as far as I'm aware, have slightly different focus areas. On some parts we compete, on some parts we have different focus areas. I would say the market is big enough. There might be some competition, that's part of it, that's fun. And sometimes you need to help yourself further. That's at least how I see.
Yeah, exactly. I think the important topic is, right, if you look on the landscape, if we now speak especially about Europe, right, where we, the business we are talking about here is based, 2-3 years ago, it looked different, right, as of today, and I believe it will look also different in 2 to 3 years. Compliance, regulatory clarity, safety, security, themes which will not go away, which will get commoditized. So the players in the market actually, us, but potentially also others, will simply adhere to the rules and will stay there. The important topic is much more about how to build an offering for the specific target groups actually you're serving. And there it's quite clear. We believe that financial service industry and also other crypto platforms and online brokerage businesses will need more infrastructure long term. That's the reason why we invest heavily into that and build it out especially for the European market.
Yeah, and I think on our side, and you probably already heard it from comments, it's much more developer and ecosystem. Like that's the area where we're pushing strongly at the moment.
Gotcha. Well, I want to make sure to open it up to the audience to see if there's any questions here, but maybe just one last final point before we get there, right? What are you guys hoping to see over the next year? What is, if we finish out 2024 and something hasn't happened and it'll disappoint you, what's that going to be?
Bitcoin at what price?
It's a fair metric.
No, I think from my side, I hope that the market will just grow in a sustainable way. I think 2021 was on the one side a great year, but it was pretty bumpy. I think what you hopefully now see is that step by step the market matures further and can keep growing in a sustainable way. I think that's, by the end of the day, in the best interest for everybody.
First of all, no downtimes from Kiln. That would be important for us. So it's on you guys. And second, for sure, I think market maturing, clear regulatory framework, clarity in the US long term, I think that's important not just for you, but for the whole industry, because it will help. Let's see how this will work out until the end of the year and even after that, right? And what we see also nowadays outside of Europe is step by step the European regulation, as you Daniel said, right, gets already started to be adopted in regions like the UAE and also others. So I think just ensuring that this industry, this asset class, this technology can actually evolve long term, and that's the most important topic, independently of where Bitcoin will stand. For sure, hopefully much higher.
Yeah, I think one we've got our eyes kind of fixed on is summertime with the stablecoin provisions from MiCA coming into effect. I think it's going to be a big milestone. So let's see how that goes and what happens there.
Gotcha. So a little bit of stability, we can get a good night's sleep for once and not have to worry too much about some chaos. Great. Well, thank you so much, guys. And I wonder, any questions from the audience for the panel here? One here.
Hi, guys. Thanks. 2021, 2022 was obviously turbulent. And in hindsight, there are a lot of risks that were always going to be the limiting factors on how high we could grow, right? Like FTX, Luna, all of these kind of things. Hopefully, we've learned a lot for this cycle. I'm curious, what in your view is now like the main things that are going to be the limiting factors on the growth that we could have this cycle?
I would actually think it's the other way around. It's almost like the industry ourselves, right? It's user experience and these kind of things, right? I think it was a point that you were hitting on earlier. I think it's almost incumbent upon us to make this as easy and accessible as possible for everybody, right?
Yeah, I think in general, right? Less complexity to reach more people outside, and the other topic is to bring it where they already are. We are huge believers in that not everybody will come to a crypto, a Web3 platform to onboard into the space and be there. What we believe in is where people already are, where people already store their value at their bank, at their payment service provider, that from there they also like to on-ramp much easier into the space. On the one side to invest, on the other side to also interact with Web3, and that's simply the focus there.
Do you think there is another sort of single point of failure as big as like an FTX that could be out there still?
Just lurking.
Just lurking.
I think macroeconomically it's much more heated up than it was 2021, right? We still have a war in Ukraine. We have quite some turbulent zones in Israel actually, right? So the Middle East is much less stable than it was. The topic of China, Taiwan is also there. So I would nowadays much more look on broader capital market themes and black swan events which potentially are out there than some very crypto-specific industry topic, to be honest.
Thank you. I know that's 2 questions.
It's all good.
Thank you. Hello, guys. Thank you for the introduction was very insightful. I have one question, maybe for the three of you. But Mark, you said that for you, at least one of the challenges was to integrate more blockchain to list more coins, maybe. And I have one question. For you guys, what are the challenges when it comes to integrating more protocol, more chains into your platform, into your app? Is it more technical difficulties? Is it about listing? It's about curation? It's about identification? I'm just curious about what are the complexities when integrating new chains into your apps. Thank you.
Sure. So I think on integrating new chains, it's on the one side, the more chains you integrate, there are, let's say, a lot of differences per chain. Some of them are clones, some of them are different. So it just takes time and work capacity to integrate these new chains. I think secondly, the more chains you have, there's maintenance work. I think we all recently saw what happened with Solana, that there was, let's say, too much pressure on the network due to which things went slower. So I think it's a combination of those two things, that you're step by step building a more complex machine, and the more complex you make it, the more work it is. I think lastly, given how important security is, and also given what kind of regulation is coming up, you need to even mature this process further. So I think that are, from my side, the things which I think will step by step request more capacity to make this happen. But I think it's up to the companies to really realize that.
One topic is definitely talent, right? You mentioned it. We worked since the last bull run hard in Europe to get more blockchain developers here. But you simply need to have enough capacity to do that as fast as possible.
And for us, it's about like sort of listing standards. Like I think, we turn down more than 90% of the projects that kind of want to list on Coinbase. And so, yeah.
Cool. Thank you.
Listening to you, you kind of offer the same thing, right? So just in terms of the industry, do you reckon there will be more consolidation on the exchange side in this cycle? Or is there room for so many of you on a centralized exchange going forward?
Mark, you have a view on that?
Yeah, sure. So I think what we saw when the first regulation came into place, I think it was somewhere 2020. I think it was the first moment when we saw some first kind of consolidation on a local level. I think now with MyCar, it might be the case that you might see a bit more consolidation. I think if you compare it with how the stock market evolved over time, it's in general a pretty good or logical moment that things might consolidate further. But this market is still pretty big. There should definitely be space for multiple platforms, call it like 5-ish. And especially given this market is still growing, you have still different kind of niches, meaning Bitpanda is focusing more on B2B2C, Coinbase is more focused on an initial retail trader amongst others. I think for us, we are a bit more focused on giving the trading experience to the slightly more advanced customer. So I would definitely expect more consolidation over time. But in my view, there should definitely be space for multiple venues.
All right, folks, I'm afraid that's all the time we have. Please join me in giving a round for our panelists.